Hello and welcome to ActivTrades Weekly Outlook. Investors are in for a big week this week as a number of much anticipated monetary policy meetings take place, in addition to a plethora of labor market data that will provide insight into how countries are continuing to manage rising interest rates and higher than usual inflation. Earnings season also continues to kick in with some big names on the list this week. Let's dive in. German inflation data is due on Monday. In September, the CPI fell to 4.5% from the previous 6.1%, the lowest level since February last year. The core rate, which excludes volatile goods like food and energy, fell to 4.6%, a one-year low. The preliminary report for October is expected to show an annualized drop to around 4% for the headline rate. The unemployment rate in Japan remained constant in August at 2.7%, against market expectations of 2.6%. The number of unemployed people climbed by 10,000 to 1.85 million, while the number of people with jobs rose by 50,000 to 67.5 million, keeping the unemployment rate at its highest point since March. When the new data is due on Monday as well, the forecast is for this figure again to remain the same for September. Major earnings reports to include McDonald's, HSBC, Unibail Rodamco. China's official NBS Manufacturing PMI surpassed market expectations in September, rising to 50.2 from 49.7 in August. In the midst of recent assistance from Beijing to support economic recovery, it was the first increase in manufacturing activity since March. The newest data due on Tuesday is predicted to show further growth to around 50.5. The Bank of Japan is due to meet on monetary policy this week, with the decision statement and quarterly outlook due on Tuesday as well. At its September meeting, the BoJ unanimously decided to keep the key short-term interest rate at minus 0.1% and the yield on 10-year bonds at about 0%. The 1% limit that was imposed in July and the 50 basis points allowance band that was placed on either side of the yield objective were both kept in place by the central bank. A range of French economic data will be released on Tuesday, including those relating to GDP and inflation. In the second quarter of 2023, the French economy grew by 0.5% compared to the previous quarter, up from a flat result in the first quarter and in line with market expectations. On an annualized basis, the second quarter GDP increased by 1%. Further growth is expected for Q3, although at a slightly lesser rate. France's annual inflation rate held at 4.9% in September, while the core rate was also unchanged at 4.6%. Forecasts are for a slight dip in the headline rate to around 4.1% for October. Other major nations to report their flash GDP results on Tuesday include Germany, Italy, the EU and Canada amongst others. The highlight will be that the GDP report for the EU, which grew by 0.5% annually in the second quarter of 2023, down from the prior estimate of 0.6% and the worst pace of expansion since the recession of 2020 and Q1 2021. A further dip of around 0.3% is expected when the latest figures are released on Tuesday. EU inflation is also due. In September, euro area inflation was 4.3%, down from August's 5.2% and the lowest since October 2021. As prices rose slower for services, non-energy industrial goods and food, alcohol and tobacco. In September, core inflation, which excludes volatile food and energy costs, was also lower at 4.5%, the lowest since August 2022. Expectations are for the headline figure to reduce to around 3.1% for October year-over-year, while the core rate may fall to around 4.3%. Major earnings releases to include Pfizer, Caterpillar, BASF, GE Healthcare Technologies, Stellantis, Thales. From a 6-month high of 51 in August, the Caixin China General Manufacturing PMI dropped to 50.6 in September, which marked the second consecutive month of growth in the industry. The October data is expected to show more growth to around 50.7 when the report is released on Wednesday. The US ADP Employment Change is due to be published on Wednesday as well. In September, private firms in the US recruited 89,000 workers, the fewest since January 2021. Further cementing the idea that the labor market is cooling in October, expectations are for only 65,000 new jobs to be added. Meanwhile, JOLTS job openings have also been tapering off, despite last month's higher than expected figures. The new September figure due on Wednesday as well are forecast to show a drop from 9.61 million to 9.2 million. Again from the US, the ISM Manufacturing PMI is due on Wednesday. The index increased in September to 49 from 47.6 the previous month, showing the smallest decline in US manufacturing sector in 10 months. Consensus estimates see the figure remaining unchanged in October. The Federal Reserve will meet for its monetary policy meeting this week, with the decision statement on Wednesday and press conference to follow shortly after. In its September meeting, the Federal Reserve maintained the federal funds rate target range at a 22-year high of 5.25 to 5.5%. Analysts expect that the central bank will again choose to hold rates steady this month. Major earnings releases to include Toyota Motor Corporation, Airbnb, GlaxoSmithKline, PayPal, and American International Group. Above market expectations of 8.7 billion Australian dollars gain, Australia's trade surplus expanded to 9.64 billion in August as exports rose and imports declined. This was up from a downwardly revised 7.32 billion in July. When the new data is released on Thursday, however, a dip is expected to around 8.4 billion for September. The Bank of England will meet on monetary policy this week with the decision statement and minutes available on Thursday. Following the latest inflation and labour data, which suggested that previous policy tightening may be taking effect, the BoE held its policy interest rate at 5.25% in September for the first time since the tightening cycle began almost 2 years ago. Expectations are for another hold this month. Major earnings releases to include Apple, Shell, Starbucks and ING Group. The German trade balance is due to be reported on Friday. In August, the trade surplus increased to 16.6 billion euro from 15.9 billion in the previous month, exceeding market expectations of 15 billion. Forecasts for September are for further growth to around 18 billion. Canada reported on the state of its labour market on Friday, including the unemployment rate and employment change among others. Canada's unemployment rate stayed at 5.5% in August for the third month in a row, falling short of forecasts. The number indicated a slowdown in the labour market compared to the previous year, although unemployment remained much lower than it had been before the pandemic. The economy also added 63,800 new jobs in September, so there are still concerns that employment is running hot. The US is also releasing key employment data this afternoon on Friday, including the non-farm payrolls, unemployment rate and average hourly earnings for October. US employment rate rose by 336,000 in September, above market expectations of 170,000 and an upwardly revised 227,000 in August. Consensus estimates are for a dip to around 172,000 for this month, while the unemployment rate is seen to be holding steady at 3.8% and average earnings may also remain the same at 4.2% year over year. Major earnings reports to be released include BMW and Societe Generale. That's all for this week. If you'd like to read the full outlook, please visit the analysis section on our website. Happy trading!